Alright team, welcome into this new video. This is the first of a mini series that I'm doing on this channel where I cover the volumetric and order flow analysis. So I wanted to bring this argument on the channel because it's the basement of my trading. So it's the thing that when I learned it, it really stepped out my trading and it made me make so much more gains with so much more confidence. So why am I saying this? Well, because you've probably been used to study and applying the normal technical analysis, right? So if you're looking only at the price, you're limiting yourself because what you can guess with price action, you have it in an objective way with the order flow analysis and the footprint charts. So for example, imbalances, liquidity grabs, absorptions, all these mechanisms, you can't see them with the simple price action. You have to go deeper, some levels deeper inside of it and really understand. That gives you so much more confidence in your trading that is mind-blowing. Probably you already heard some of these concepts, but the creators and the social media made them easier to understand for the public and for the retail traders. But in this video and in this series, I'm gonna cover every single each of them and I'm gonna make you a better trader. So let's get on the chart. Okay, so first let's explain what the volume profile is. So this one that you can see here on the right of my screen is the volume profile applied to today's session, okay? So what this tells us is it plots graphically all the executed order in a specific session and in a specific range that you selected. And this is very, very powerful because it doesn't show us the pending orders. So all this and all these are pending orders, right? Orders on the bid and orders on the ask. There are orders that wants to be filled, but they are not filled yet in the market. This right here instead is showing us all the orders that has been filled in a specific price. So this is very, very, very useful, but more useful than this is seen applied on a whole session and on a chart. So let's get into that. Okay, for example, here we are on SPY and I opened up 5-minute charts showing the one single session, as you can see right here, starting here and ending here. And so we're gonna apply the volume profile to this session and we're gonna see how this tool actually can show through the graph. So we're gonna start clicking there and drag it all the way through until the end of the session. And here it is. As you can see, it plotted this chart right here. So what this chart means, there are some as you can see, there are some highlighted areas. So from here to here is all darker colors. And this part right here is it's less dark, right? It's more shadow. So what this means basically is that the volume profile highlights the value area. So this area right here is called the value area and is where the 70% of volumes develops, right? 70%. So this is the area where the most participation in the market occurred. Why is this so important? Well, because we can see, for example, right here on this lower end of the session, this lower part, a lot of volumes came in. And so that means a lot of players wanted to participate here. And what the volume profile also shows you is this red line right here. So this red line is called the POC. So it's the meaning for point of control. So why is it called point of control? Well, because this is the area where the most volume developed in the whole session, right? This is very, very important because this line right here can function as a support and a resistance later on. So another powerful thing that you can do using this tool is applying it to each session. As you can see, I did here. So this session, this session, this session, they all have different volume profiles applied to it. And with this method, you can identify supply and demand zones way better and in a way more objective way than just simply drawing rectangles on the chart, right? Because as you can see here, you can simply identify where the most amount of POC align together. So for example, this one, 1, 2, and 3, they all align on this price level, so 594, right? So this is a really good supply area right now. So we can mark this on the chart. Let me delete this. All right. So we can mark this on the chart, the box, just like this, turn it red, and here it is. And here it is. You have it. Right now, you have a really good supply area that you can use if the markets retrace here, maybe comes back here. You can think about taking a short in this area right here. So this is very objective. This is not so this is very objective. This is not guessing at all. Another thing you can do if you wanna make it more clean, you can just totally delete the chart and just look at the profiles. It's way more clean. It's way easier to see. I don't know if you can see it here. And yes, so this is a very, very powerful use to it. So as you saw, there are different shapes of volume profiles for different market conditions. So I'm gonna walk you through each of them, and then I'm gonna show you a real market example of how this works. So first of all, let's start with the most common shape of volume profile, that is the D shape. So it's gonna look like something like this, all right? So it looks like a D. So this is the value area, and this is your session, and this means that the session is very balanced, right? So probably is a session looking like this, right? So this is this D shape. What this means is that we are in a range phase, we're in a consolidation, and in this type of condition, we don't want to trade because the market is ranging and is not taking a clear direction. Then we have the B shape, so this one, and the P shape, so this one. So what this means, this usually occurs when the market is actually trending. So for example, the B shape happens in a short scenario and the P shape in a bullish scenario. So the chart is gonna look something like this, really short and fast dump, and then a small consolidation on the lower end side, right? Instead, for the P shape, a really strong market ranging up and then slowing down at the top. And last but not least, there's gonna be the bigger V shape. So a shape looking something like this, with two value areas. So what this means, the market is probably gonna range on the bottom half, then start ranging in the upper half. So also this one is a consolidation pattern and we don't want to trade in this. Okay, so now I'm gonna show you some real life examples, trade that really happened on the market. So we are on the S&P 500 future and we're gonna use, for example, this chart right here. So as you can see here, this positive impulse happened and then a big retracement here and then the market bounced off. But how could you predict this bounce, like this V-shaped bounce? How could you get in on the lower part of the retracements? Maybe you probably said, you know what, so this is a demand zone, I'm gonna get in here, boom, stopped out. This is a demand zone, I'm gonna get in here, boom, stopped out. All this doesn't work because it's all guessing. There's no objective analysis here. So what you wanna do instead is you wanna take the volume profile, start from the bottom of the move to the very top, and here it is. Here you have your volume profile, you have your value area, and as you can see, this is the part where the most volume actually developed, where the most buyers got in. So what you want to do, you want to wait for the price to get in that area, gives you the confirmation, and then take the bounce. This was a really good trade. You could have, let's say, you could have entered this getting down here with a stop loss just below the value area and then take profit up there. And just like this is a 1 to 2 risk to reward ratio, really good trade. Alright, so second example, we're still on the ES future, and as you can see here, we have this downtrend developing here, and let's say you want to get an entry here, but you don't know where, like how can you know where to enter, when to enter in a trend like this one? So what you want to do, you want to take your volume profile. Let's say you're here, you miss this entry, and you want to take another one, but how can you know where to enter? So you're gonna start here from the start of the move to the bottom, and this is your volume profile. And as you can see, you're gonna take your highest volume area, that is this one, mark it red. You're just gonna wait the price to get back in. So you could have entered a short position here with a stop loss just above the value area and a short continuation to the downside. And look at this trade. Really easy, good profit, good confirmation, and there it is. Alright, so third and last example, this one's still on the ES future. As you can see here, big consolidation range, then the market dropped off and then it claimed back up. But the market structure is totally bearish right now, so you wanna get in for a short, but how do you know where to get in on this pullback? Well, you might wonder, alright, I'm gonna get in as soon as you see this big red candle, now you got stopped out. I'm gonna get in, now you got stopped out. So what you wanna do, take your volume profile, start from the start of the move until to the bottom, mark your highest volume area, and just like that, you wait for the price to get back in that, gives you some confirmation. Example here, you take this short, stop loss just above the value area, and take profit all the way to the bottom. And this was a good winner. Okay, so if you got value from this content, drop a like, comment, and subscribe, because you don't want to miss the other videos of this series. And see you in the next one. Bye!